market video. Figured I'd play some GNR, looking for a little breakdown. Markets early next week. Right on, Axel. Yeah, we had an interesting close to the week. We had a very powerful 3-day rally. Wound up selling my PAS. It went up. It didn't take out the 2550 level the first time I took out. It did wind up cracking it later in the day. It does look bullish. I would probably look to buy on a pullback right now. I think the market's ripe for a pullback. Could be worse. We are still in the range. You've gone up the last 2 days in lighter volume and gap ups. You had some. What we're up on really is an employment report that was better than expected, but it still wasn't very good. And the VIX positioning right now is probably what would concern me the most if I was long. And I'm going to focus mainly on the VIX just because that's been pretty reliable as far as in my trading over the summer here. As you look back here, this is the hourly. It goes back about two months approximately. As you can see here, we had two falling bullish wedges. One that really panned out, that turned into the sell-off to new lows from 113 to 101, and the second one that didn't really pan out, which we got a pullback, but we never were able to cross. We weren't able to break out like we did on the other bullish falling wedge, and that's how the market was able to rally or stay somewhat honest throughout the summer. As you see here, we're at another bullish falling wedge here, and we have some other indicators too that are suggesting a bounce. As you see here, you got the MACD. Look at my pointer here. You got a lower low here, a higher low here. And it looks like another higher low is forming right now. You got the histogram has been ticking up. As you can see here, the histogram bar is getting closer to 0. You got a stochastic reading of 5 and 7 on the hourly, and you got some positive divergences setting up here in the RSI over the same period when you had the positive divergence in the MACD. So near term, I think you're extremely vulnerable for a pop in the VIX. I would think that it could at least come up and test this high 24 area. You can see the trend line here. If you draw these two lines together, I could see it challenging that area. And if you want to say it's gonna really break out, it could do like we did back in July here, and we could really get a nice breakout back to above this 29 area here, which is always a possibility. So you had the shakeout here. It looks like you made a marginal lower low here, but you have positive MACD divergences going back a couple months. If you look at the daily VIX, you hit the Bollinger Band. Now, if you know the theory of the Bollinger Band, you stay within the bands 95% of the time. And right now we're outside the lower Bollinger Band. We're at 2131. The lower Bollinger Band is 2162. We had a negative cross the other day, and now it's below the 0 line. But you have a positive divergence that could be setting up here because you still got a ways to go before the MACD would confirm this downside and break the negative roughly 1.5 area on this MACD. And you got an oversold stochastic with a 3 and a 21 reading. So then you got potential positive divergences setting up here in the RSI over a longer period too. If you go back here, you got lower lows on the RSI. So I would be looking for a correction of this rally. You also have some other indicators which are giving you clues. If you look here at this spider SPY 15-minute chart, you can see here the negative divergences piling up from the 108 area. This is I started wanting to get short this market after the initial move, because you saw the MACD come down, and I was like, well, you know, I think it can go a little higher, and then I'll look to short it. And I had a hedge on the first day, so I held the hedge, which is a short position of maybe 20-30 contracts. I held that because I was doing well with my other positions, and then I added a little more Thursday, and then I added a lot more on Friday, just because now you got these negative divergences really just piling up here on the 15-minute chart. You've had them over here. The gap up eliminated the RSI negative divergence, but now you have you touched the 111 area, and then you rallied on light volume up to the 111. You see the stochastic having lower highs here. You have MACD histogram is ticking up now, but you still don't have a bullish cross on the MACD, and you're already overbought on the stochastic. So I would be looking for a correction here. You could get a possible gap up Tuesday, and then I would look to, that would be an ideal sell point, but very likely could just wind up starting down. As you see here, you have potential on the hourly, you have potential negative RSI divergence setting up here. You got the Bollinger Bands are contracting, which happens a lot of times after you have, as you see here, you had a big move, Bollinger Bands contract, you get a correction. You could get a move like that where you have just a correction to make like a normal uptrend line, and then we could proceed higher, or this move could evaporate really quick. Either way, if I was long, I would definitely be looking ahead to the sidelines here, taking some profits, looking for a better buying opportunity in this market. I mean, you forget about fundamentals. As technicals right here are just telling you, head to the sidelines. You're still below you still have the death cross, which is the 50-day below the 200-day. This is the SPX. You're still trading below the 100-day moving average, which is 1106.27. You close at 1104.51. As you see, you got the lower volume. You have an MACD cross, but you're still below the zero line. So if you wind up having a decent correction on Tuesday, you could actually never cross the MACD above zero if we start getting some negative momentum coming in this market, and you could have another bear turnaround below the zero line. When that happens, you've had some pretty nasty corrections in the past here. As you look, at the sell-off from 1130 to 1010, which I caught in June. Now that happened. It was a bear cross below the zero line, and that actually set up for a positive divergence, which turned into a bullish momentum for the market. But now, if you get the bear cross, you're gonna, you could possibly be heading much lower. And I don't know what the catalyst is going to be. I don't know if it's just people are going to start focusing on reality because most of the traders are back from vacation. But right now, I think you're looking for a near-term pullback in the beginning of the week. I am heavily short the SPY right now. I'd like to trim that position a little bit, just because I have a decent amount of October puts. Do have some Novembers also, but I'll be looking to trim that and adjust accordingly towards further months out. Right now, I am a seller of rallies, and I may be a buyer on a weakness, depending on just how weak it goes. It might go back to this 1080 level. Anyway, have a good weekend, and this is it.